very big, another revaluating factor for the market for global investors.
Will you buy PSUs? Will you buy SBI? Would you buy? No, seriously. I mean, we are celebrating
my
this
answer
investment.
is still
Great
no.
news.
No. So frankly,
you're sounding bullish and you will not buy PSUs.
No. I clearly said that I am a great disbeliever. For me, it has always been a tussle between the heart and the head. And another reason is that I have enough risk-reward adjusted opportunities in the market.
But Kunj, this is a view which I'm asking everybody. It is not that Indian corporates have done something extraordinary. You keep few good companies aside. There are problems of execution, there are problems of integrity, there are problems through the business, and then there is a demand issue which is there. PSUs, at least you know that there is no accounting problem. PSUs, you know that they would be disproportionate beneficiary of the tax cut. PSU stocks are also available cheap. So should one really shy away from buying PSU stocks just because they have a prefix public associated with it?
Okay. So let me answer it like this. Valid points at the outset. Before moving into looking at the financials, for me, I'm sure for you as well as others, the investment process starts by understanding the business ownership / management in Indian context. Mostly it is taken together. Now that is where the challenge used to be till date. That being able to find out government's future plan on a sustainable basis for a medium to long term always used to be challenging. They will change overnight, or maybe if not overnight is too aggressive, they'll keep changing based on, first of all, the government political composition changing, and even if not that, minister changing, and within that also based on the government's need keep changing. Now that is where it becomes difficult to be able to take a longer term view, or leave aside longer term, even medium term view on the policies that the company will keep following. And as I said, against that, I'm happy to have lower returns. If I want a higher risk, higher return, maybe this is what will play. Even now, if I believe that yes, indeed, privatization will happen, then yes, BPCL has one of the best financials. Container Corporation has one of the best financials. Air India, maybe it doesn't have. But so if I'm willing to play that high risk, high return game, then yes. But as I said, if I'm wanting to be okay with lower risk, lower return, then I do have other opportunities with challenges being there. Last almost 2.5 years have been very big challenge for the Indian economy, macro as well as micro.
So for those who are, and again I'm not pointing things at you, I'm asking again this very basic question, that there are a lot of money managers who are hiding in an Asian Paints or a Trent or some of these high PE stocks. They are good companies, but isn't that high risk investing, that you're buying high PE multiple stocks which look fashionable right now, but they give you near-term visibility? In the long term, there is a risk of time-wise correction and a price-wise correction. I mean, buying stocks at P multiples of 80, 90, 70, 80, 90, that's also high risk in my book.
Point conceded. Yes, indeed, that also is high risk. There is no doubt. It's a question of which risk one chooses, and that's what makes the market. Unless there'll be different opinions, there won't be buyers and sellers.
Of course.
True. So where else do you find that buying opportunity, if not PSUs?
So again, as I said, if I go by risk-adjusted, reasonably optimum return, not very high return, not certainly very low return also. On a broader sectoral basis, I still find opportunities in consumer. Slightly valuations high, yes, no doubt. In fact, to add to what we were just discussing and Nikunj's point, the valuation of the good quality management / companies is also becoming premium more and more, because we are finding on a daily basis the whole set of not sectors but companies or the business houses going completely off the radar of medium-term investors because of the various governance issues that are happening. Now, once that is happening, those investment opportunities are getting off the table. So what is being left off the table? The number is shrinking. And that is where we are seeing the valuation because of the limited supply for the demand of money that is there. Let's keep in mind that the post-tax cuts, FII investors have still not come to India. So let's imagine a scenario wherein they decide that, okay, let's come back to India. The whole question of valuation, the premium valuation will probably get left aside. Coming back, so consumers, despite valuations being not as comfortable, both durables.
You mean staples?
All durables as well as non-durables. Then I still see opportunities in BFSI, leaving aside the public sector banking space. That is where the opportunities are there. Two very, I don't know if I should call it secular themes which are right now playing out in the market are insurance and internet-based stocks. So while
there's only one stock. Info edge.
I was just, so let me just complete that. While the number of stocks available is lower, but look at the valuation, price movement, whatever you call, of the two recent IPOs. India Mart, Intermesh, and FL. It's not an investment recommendation. Maybe we'll come to that separately, but just for the sake of discussion, since we are discussing, look at the way their share prices have moved. Look at the valuation they are trading at. First of all, the IPO itself came, the valuation was not looking comfortable, and after that, similarly in the insurance space. So it reminds, probably, only time will tell if it pans out that longer, of going back into late 90s and early 2000s, the way IT sector was continuously being revalued. The way the infrastructure capital goods were being revalued in 2005, 6, 7. So probably something like that thematic is playing out.
Okay. I just simply want to mark SGX. What is SGX is telling you? We could be in for a good start. Now, for me, the moot point, of course, is divestment, but it is also the fact that the oil supply has been restored. Oil's gone back to the normal levels. We've not seen any ugly spike in the oil. That one day move followed by a little bit of follow up, and oil prices have come cracking down. So if you're a long haul watcher, remember oil prices on your side, and half the battle is won on the macro front. That's the way I look at it. Oil prices not on your side to make a case that India is going to do extraordinarily great on the macro front. I think that whole purpose gets defeated. So on a macro factor, we can talk about IIP slow. We can talk about tax numbers, tax collections which are slow. GST is not strong. But that's yesterday's data. Tomorrow's data could be oil prices, forex reserve, recovery in the economy, government spending increase, and capex which could kick in. That's my sense, the way I think that what you should be focused on, rather than what you should focus on, rather what you have been focusing on. The bond yields, they are important for me to mark. Stubborn, very stubborn. Bond yields have been very stubborn because markets feel that the fiscal deficit would be missed if the divestment targets are not being met. Kunj, would you lay your bets in the metal stocks? We were doing some discussion yesterday, which is that if you historically look at long-term trends for metal stocks, they tend to bottom out between 0.6 to 0.7 times the book value. They're not there yet, but they're nearing there yet. And you have to buy bad news in metals. You have to buy at the bottom of the cycle. They're the bottom of the cycle. Yeah.
So you are right, Nikunj, the good news and the good prices don't come together. In general for the market and stocks, more so for commodities and metals. I think metals are always a good trading bet. Now that trading time frame can depend on the traders, could be short term of intraday to few days or weeks, or could be 6 months to a 1 year, maybe extending a little bit more in some cases. But the metal stocks have never been, and possibly can never be, really medium long term buy and hold forget kind of stocks. So I think at the current price to book ratios, as you rightly said, the range that they move in, they are reasonably close to the bottom, and anybody wanting to take a trading bet off depending on the time frame, few months to a year, I think that can be looked at.
Right.
The gap, ICICI Bank in 3 months has given you a flat return. State Bank of India during that same time has given you a return of minus 25%. I don't like PSU stocks. Do I know the answer before I ask the question?
So thanks for pointing this out, Nikunj. In fact, if you extend this chart over multiple time periods, mostly you will find the similar result of significant underperformance of public sector.
It would be true, actually. It would be true.
So that answers. Now let's also look at the fact that there are a lot of trading people in the market who are indeed needed. They provide liquidity. For them, such stocks...
But to throw in one more angle, and that's just my personal view, it's not a borrowed view, I'll be very frank and honest. State Bank of India, we still, bank business is 80% of its business, but they are taking the subsidiaries public. SBI Life has been a brilliant listing. The chairman told me last Friday when I interviewed him that credit card is coming. ICICI Bank is valued for all its subsidiaries. When will we start acknowledging that SBI की भी subsidiaries ठीक-ठाक हैं? And they are market leader in every category. And there is no borrowing there.
और वो market leader हमेशा से रहे हैं.
Right.
Let's not forget this also. So I think that is something that has been completely being ignored by the market. Probably the other factors which we have been discussing time and again keep dominating. One is of the inconsistency of the policies of the owners of such business, particularly public sector business, which is the government. Two is the lot of directed business, which probably used to happen, doesn't happen now, politically directed, industry directed kind of businesses that they have to do. Three is, of course, as a result, the pressure on the margins that comes to them. Even financially, if you compare, we will clearly find the difference between the net interest margins, the return on assets of public sector banks and private sector banks, even within SBI and ICICI also. So I think those are the various reasons. The kind of shock people get, if I remember correctly, SBI used to be around 340, 50, 60 hardly few days ago, and now it's at 270. Now, how much will especially a retail or even a non-retail investor, unfortunately आता ही तब है जब एक तो बाजार चल जाता है, sorry for jumping into हिंदी,
No, no, it's okay.
और उस पर फिर उसको टक करके मार पड़ती है, तो उसको इतना शॉक दूसरे स्टॉक्स में नहीं लगता है. And that is where I think this difference of valuation will continue. As I said, there is a full big market for traders and they need these kind of stocks. They are the brave hearts. They know the risk that they are trading.